Hello, everybody. Think we can get this thing started. Thank you all for joining. I'm Juan. I work in Simetrik as the VP of Key Accounts. Today I come here to share a little bit more about the payment space and generally best practices and how we help some of our customers. We're going to go into a fair amount of detail, so brace yourselves. This talk is going through into the weeds and sharing a little bit more about how we help and on the payment space in general. If you have any questions, you should see on your right side of the screen a Q&A button. You just gotta press it, and then we will get your questions on the platform, and we'll make sure we can address all of those one by one. Either we'll reach out via email or in the webinar itself, and we'll be clearing out any questions that you guys may have. Um, so yeah, let's get going, and let's talk about payments. All right. So this conversation or this webinar, we call it the Payment Masterclass: Control All Money Leakage at a Global Scale. And basically, in a nutshell, what we're going to be looking at today is um, basically a success story that we have internally. Because of confidentiality reasons, we won't be disclosing what that customer is. But overall, this is a fairly large customer that has a global presence. And we've been building up internally within Symmetric a best practice playbook of how a perfect reconciliation and basically financial control, making sure there's no money leakage at all at any point in your reconciliation chain, how that looks like for global companies, right? So, as we all know, and I'm gonna go dialing in a little bit more in a couple of minutes, but the payment reconciliation space and generally any card network or ACH debits or if we go into Brazil with Peaks or Boleto, or Colombia or India, um, there's a ton of different variabilities that reconciliation may have. So here, what we are proposing is basically a framework of how to look at that payment reconciliation side, specifically card network side, and what are the key things to look at in terms of how to make sure that our payment company, our acquirer, our bank that may sponsor ISOs or sponsor payment companies is not losing money when all of the money movements are happening in the um, on the back, right? Like make sure there's no money left. All of the money is accounted for. So the first thing is we always start with is who's this webinar for? And long story short, we're basically would be talking to payment providers. We would be talking to acquiring companies and banks and acquirers. I'm gonna ask my team real quick if they can switch me to the left side of the screen. Thank you. So we can all see the slides a little bit better. But yeah, this would be basically any company that's dealing with an acquiring reconciliation or a network reconciliation, and they're receiving live payments both on the authorization data kind of layer and on the financial side, either bank accounts or even going to the accounting systems, to the ERPs, right? So this is who we're going to be talking to. Generally, folks around the FinOps, the CFO, financial teams, operational teams in this payment companies are going to be most, probably the biggest ones to listen to and get to know this process itself. So the agenda for us is going to be very simple. We're going to share a little bit of what we do at Symmetric, how we help these companies in terms of reconciliation. Then we're going to jump into a success case. So we're going to do basically a ROI case that we have with one customer, a little bit going into how big this customer is, how many sources they are, and then we're going to go into really the best practice and the money flow itself. So that's generally what we're going to be talking today. So I appreciate everybody joining in. I see the list. There's a good amount of folks in here. I see a couple of banks, sponsor banks, acquiring companies, a fairly large amount of payment service providers, PSPs, and even a couple of competitors around. So we're you guys are welcome as well, and hopefully we're going to learn together during this session a little bit more about payments and and how we can structure this reconciliations together. Again, before we jump in, I mean, why you should guys listen to us or listen to me for that matter in Simetrik, and what do we do, and how is it that we know these things, and why are we sharing this knowledge here? So the first thing is we as Symmetric, we're basically a reconciliation platform. There's a ton more stuff that we do, but at our core, our bread and butter is reconciling transactions. As we all know, that is really valuable for very high volume businesses where there's an intersection of high volume, high complexity, and either regulation or high risk associated to those transactions. So any bank, any PSP, any acquirer, as I mentioned, even marketplaces or large merchants would also need this kind of basically process, right? Either internally, you guys build it yourself with an internal development, sometimes spreadsheets, or you hire a company like Symmetric to take that and take care of that process for you. In our case, we operate in 46 countries. We help multiple customers in those countries. As a company, we raised over 115 million. And one of the key data points that I had recently was that we're actually reconciling over a billion transactions a day. So every day through Symmetric, go over a billion transactions, which is a fair amount of volume. And we're very, very fortunate to be partnering with, Goldman Sachs, Tiger Global, FinTech Collective, Y Combinator, and a good amount of set of investors that have entrusted us to, help them either reconciling or just look at the future of the company in a very bright eye. So in short, that's who we are, and we now operate all over the world. So we have customers in the U.S., we have customers in Latin America, we have customers in Europe, we have customers in Africa, we have customers in India, in Southeast Asia. So we're a global company that's operating this kind of reconciliation and payment reconciliations all over the world. So we have had a fair amount of exposure to how these reconciliations go. As I was saying, where we really deliver value is in that intersection, right? Like you have this risk or regulation, this volume component, and very high complexity, right? So there's a lot of rules, there's a lot of things to get automated, and in that intersection, we really deliver a lot of value, whether that's for a PSP, for a bank, for a retail company, for a merchant, et cetera, et cetera. Um, and on top of that, of our platform that we built, we are also building actively AI agents that help with that interface between that data component of the reconciliation and maybe more the human component of following up with disputes on a chargeback kind of use cases, and or making sure maybe I get some rules suggested by an AI, or I can get some suggestions on how this transactions may not reconcile with that transaction in the future. So there's a good amount of AI agents that we're building on top of that, but our core is really a transactional platform that's built for an enterprise grade kind of reconciliation process. And again, we've gone through a fair amount of security and certification so that both public and private companies are trusting Symmetric today to reconcile their transactions. So that's generally what we do. Me personally, and I'm Juan, and I've been fortunate enough to help the company grow all over the world. So I've worked with customers all over in Latin America, customers in the U.S., customers in Africa, in India and Southeast Asia. So I have also a little bit of context on how this payment systems and payment networks work in different countries, right? So without further ado, we're going to jump into the customer use case again. And if you have any questions, just write them up on the Q&A section of the platform, and we'll reach out to you guys directly via email and make sure we have enough time to discuss what that question means, and hopefully help you guys as much as we can. So in terms of a customer use case, in order to frame a little bit more of how this company or the size of the company is, we're talking about a fairly large payment company that's doing around more than 30 million transactions every day being reconciled. And we partnered this company to build over 900 reconciliation flows. So this means a whole flow of data with a lot of different data sources, different rules, and different kind of characteristics by themselves. So it's almost 1,000 different flows that this company is reconciled with Simetrik. Leverage, of course, by our platform, which is no code and is very easy to use for any non-technical user. So that's why there's a fair amount of flow. So anybody can take it and build their own flow. Um, More than 100 data sources connected. And that, I think, will sum up the operational side of the reconciliation that we have with this customer. But in terms of the impact that we delivered, was generally a very positive outcome in terms of plain whole cold hard cash. We deliver over 200% on the ROI case, where basically we compared how much the customer was spending with us versus what were the savings around disputes, differences, chargebacks, et cetera, that the customer was able to recoup because of us. So a very positive outlook for them. They're still using us. They're fairly sizable, and the project is growing and growing by the day. And one of the key things that they wanted to hone in was how can I add more payment partners globally faster, right? So that was one of our metrics, and that metric basically ended up in reducing the time that it took them to add a new payment partner, which is originally was around 6 weeks to now 2 weeks, right? So pretty much they can turn in a new payment partner in around 2 weeks without them knowing that partner at all before that. So it's fairly quick, the speed at which they can explore new countries or explore new markets or just explore different partners in a known market, right? Because of acceptance rates, because of costs, et cetera, et cetera. They can really start looking at other partners and making sure their operation is as efficient as possible. And overall, for all of us that are in payments, um, a good part of the return, we measured it over the total payment volume, right? Like the TPV numbers, one of our North Stars for sure. And overall, we deliver a return of 1.4 basis points over that total TPV. We're talking about, a good amount of billions of dollars in TPV a year. So for anyone in payments, 1.4 basis points over that TPV means a huge amount of money that their return of the project actually delivered. So again, very happy customer, and we're still working with them, right? So we're going to build this use case in two parts. The first part is going to go into more of the operational side, which means maybe some hiccups, some problems, some bottlenecks that the customer had in terms of their current system or what they were using before us. And then we're going to jump into what kind of economic impact that had and really how that returned materialized, more so than just throwing numbers in a spreadsheet, right? So going to the first part, which is the operational side, there are basically four things. There's a bunch more, but there are really four were the major things that they looked at their internal built system that they had before Simetrik that was maybe not delivering as it should or that they expected. Um, the first one is that the system was good for certain geography, like geos, right? So a couple of countries they're working in and it's working, but they're operating in multiple countries, like tens of different countries, and they want almost the same system for different countries, right? But as we know, every country has its own rule sets, maybe taxes changes, maybe fees, et cetera, et cetera. So that internal system would take a long time for them to actually expand to the whole world or the whole operation. And they just picked maybe the big TPV countries, and they would use the internal system to tackle that. So that was one of the limitations that they currently had. The second thing they currently they were having challenges with is that they only had the simple flows because of all of the rule changes and all of the things that can go wrong in a transaction reconciliation. They would just almost build those happy paths, as another customer called them, where like this is how it should reconcile. But as we go into that operational kind of recon, we all know that generally a good amount of time the transaction doesn't go through the happy path, right? Like there's data problems, there's actual maybe the user called the chargeback, et cetera, et cetera. So those edge cases that were not part of that happy path were had to be tackled manually by someone, um, and that kind of started building a bottleneck in the process, where as more rules needed to be implemented and as that internal system was not going as fast as it should in terms of development, then those rules that start building those those edge cases start accumulating, and then put more strain on that manual part of the process that the team had to face and had to figure out how to make sure that they can tackle that. So that was the second thing that they were struggling with. And the third was that all of the internal systems were actually developed by the teams on each of those countries, right? So if the team in X country developed their own system of reconciliation, and maybe on Y country they develop a different system of reconciliation, right? So not only we're not covering the whole operation every country, but for each of those systems that are reconciling are very isolated and they're not interconnecting between each other. So it's very hard on the reporting, it's very hard any data manipulation they needed to do to make sure, for their compliance, for their reporting and regulations and stuff that they needed to to deliver. It was very hard to stitch the data up together. So they wanted a system that could cover all of those. So that they didn't have to think about, all right, was this made in this country or that country, and how can we change the reporting to cater to how that system behaves? Because changing the systems again will take a fair amount of time. Um, and the final thing that they were struggling with a little bit was that autonomy that maybe the finance and the operational team wanted from the tech team. So the flow, how it worked before Symmetric, or previous to us coming in, was basically the finance team would look at the current system. They would say, "Hey, we need to adjust this flow or adjust this rule," and then they would create a ticket for the tech team. And of course, that ticket sometimes gets deprioritized because there's other stuff that the tech team's doing, and generally, all of the tech teams have a huge backlog. They're incredible, but they have a ton of work. So the finance team wanted to give them a little bit more autonomy and speed to switch that and make sure that they could tackle their own setting up of the reconciliations and the automations, pretty much to the point where like they wanted to get the sources and they wanted to basically have a complete handoff to them on the process if they needed to change anything, if they needed to create a new flow, anything at all. That's where the financial team will come in, and that's what they wanted. They didn't want this ticketing going back and forth and requirements and list this and stuff. They just wanted to take control and autonomy and ownership of that process. So that was the fourth thing that they wanted. After Symmetric, of course, that went well, as I mentioned. So Symmetric covered the whole operation, so just not a couple countries, but every country that they were operating in, which was very one of the big requirements for them. And again, flexibility wise, we could adapt to any type of different rule that they needed on a specific country, you know, fees, taxes, et cetera, et cetera. We adapted that. All of the flows were there. Initially, you had maybe a couple of main reconciliation flows, two or three happy paths. Now with Symmetric, they started creating all of those outlier paths, right? Like, so suddenly now there were just not two happy paths, but for the initial reconciliation, now suddenly they had a good amount of use cases and a good amount of rules that could cater to whatever happened in that specific geography, right? So, that made basically Symmetric explode internally, and all of the users start using it and building their own flows and their own rule sets, which ended up in, of course, um, generating almost 900 plus flows, but also covering 99.9% of the use cases they had. So pretty much almost all of the edge cases are covered and automated completely. So there's no human in the loop. The human in the loop comes to that 0.1%, which at that scale is it's relatively small. And the amount of burden that operation team had was relieved pretty much completely. So that's another big thing. In terms of country dependent as Symmetric show one platform, then all of the global reconciliation was resting in one place. So all of the reporting came back to one place, right? Like any regulator asked for something, there was just one place to go and look at those things. So that's where that's another thing with they really appreciate it from us. And now because of the no code component of Symmetric, now suddenly that finance team is not depending on tech anymore. They can build their own reconciliations, they can build their own automations, and they really can go at their own speed. They don't have to be waiting for tech to prioritize their ticket. They can create their own flows tomorrow and just be in production in a couple of days and start working the way they want to work. and creating the reports they want to create. So that independence was a big component. So that was a little bit more on the operational side. I'm going to jump into maybe some of the more payment related value deliveries that we did with this company. Um, so pretty much what we did, or the reasons why we delivered some ROI cases, was because they were having some trouble on the operation that maybe they didn't have visibility on. The first one was some transactional withholding calculations. So long story short, on some specific countries and for some merchant codes specifically, um, the withholdings that the bank did locally were not right because of nuances, right? So for most of the merchants and most of the transactions, the withholdings were accurate and were perfect. But for some other merchants that had a special tax treatment, those withholdings maybe were a little bit too much. So what we helped them look at was basically tax withholding on a transactional basis, and then sum up that information so that they could go back and say, hey, this merchant that I should get a withholding of X percent, I'm getting withhold maybe 2 times or 3 times more than I was expecting. And these are the transactions that can prove that. So they went back to the bank and say, hey, there's a difference in terms of how you should treat this merchant or in this transactions. And all of that was, of course, supported by the fact that they had transactional level reconciliation, where they would go to the bank and say, all right, we need to fix this. And that was part of the way they recouped the money. The second one was a refund and chargeback misclassification. So to keep again the story short, some of the transaction codes that some partners, some payment partners had for refunds and chargeback were exactly the same. Um, so basically, there was a gap in terms of losses because, again, for all of us that are in the payment space, we know that basically a refund could be maybe a one-time thing and it's closed. A chargeback has a whole dispute process behind it and stuff. So that difference generated, a loss in terms of the fees that the networks would charge because of the chargeback dispute process. So, in summary, the more time you take to dispute a chargeback and to prove that that transaction was legit as a payment company, the more the network will charge you to settle that chargeback, right? And if you need, someone to go in the middle and be act like a judge, for example, like Visa or someone like, the network to go and do that, then that means the fees are start racking up. So because of that misclassification, those fees were racking up. And because after we look at that and say, hey, there's a duplicate here, and really is because they're using the same transaction code. Let's split that and let's treat them, the chargebacks as chargebacks and refunds as refunds. Then all of those fees that were racking up by net networks and by um, all the payment partners because of that treatment just basically went to zero, right? So they were not paying those extra fees that we are paying before because of that little code that was reused. And then finally, there were some use cases where some partners would double debit when there's a chargeback or a refund. Again, that was a little bit of a mistake that those payment partners were making. But again, in the volume, those kind of nuances were just missed in the huge volume that they were working with. But then again, because we have that transactional level of clarity and visibility, we could, they could reach out to the partner and say, hey, there was a refund here. Yes, you can debit me once, but not twice. Right. And those double debits that they will receive from other partners, they reach out and they're in the process of recouping that money. So that was three of the use cases. We have, of course, more use cases with it, but that was three of the big ones where they could recover that money back and make sure there was a positive ROI for investment in Simetrik in terms of how the payment side works. But also they got a lot of more benefit that is not just that part, but the other part that we mentioned, right? Like the autonomy that the finance team now has, the fact that they are not, playing or dealing with tickets anymore with tech. The fact that they can cover the whole operation globally with one platform, and it's not just different platforms in different languages made by different teams and maybe two or three different time zones, and they could go and reach out to the reporting in just one single repository, et cetera, et cetera, et cetera. So there's a good amount of value that came from that point, but also this part on the payment side, right? So The way we deliver this value goes back to a good amount of a best practice playbook that we've built within Simetrik that I want to share a little bit more with you. But there's a good best practice playbook of how to think about payments and how to structure the reconciliation for the payment side. Again, you could be using Simetrik as a platform. You could be using, you know, anything else, an internal development, whatever. But it's more like a framework of how the process should be taken care of, in what order, to make sure that you're not, losing any money in between. Um, this process is fairly robust. It's large. I'm going to go through, very generic kind of um, conversation right now. But again, reach out and go into, deeper in the weeds if you guys want. But again, I'm going to be try to be as specific as possible. But again, we don't have time to cover the whole thing. But hopefully this relates to everybody on the payment space. So let's start with the flow. So in terms of best practices, the way we think about how the proper, what we call control, but really is the reconciliation process, how the proper payment flow would look like and the reconciliation would look like. And basically what we look at is 5 layers of this process, right? The first layer is what we call basically all the data management. We need to centralize the data, make sure we can parse out the data properly, and they make sure that we can also account for all of the transactions that we did, right? So think about any technical issue that may be there in the data delivery process, or think about any duplicate transactions that either an acquirer or a network can send because of a technical problem as well. We need to clean those out, and also we need to make sure the format and the parsing of the files is consistent, right? And all of this we're going to be, again, we can do it within Simetrik, but I don't want to talk more about us. I want to hone in into the framework, but we can cover basically from the end to end, right? But parsing out formats, technical issues, duplicate transactions, et cetera, et cetera, et cetera. So it'll be the first part. The second part we're going to think about is that what we call the operational control. So the operational control is basically looking at all the files that I'm receiving and making sure they're consistent with what I'm expecting based on the volume that I transacted. So to be a little bit more concise, basically what I'm checking is that the networks are acknowledging the data that I'm sending them, and they're acknowledging that they receive that data, and they will do a later settlement of the data. They would give me the fees, they would give me the chargebacks, refund, et cetera, et cetera. But I just want to make sure that there's an acknowledgement there that in the future I'll receive that money on the settlement itself. So that's what the operational control would look like, right? There's a lot of stuff in there. There's, the clearing side, the chargeback side, the refund side, et cetera, et cetera. The scheduling of that payment, like when I'm going to get that money, et cetera, et cetera. But all of that would respond to that operational layer of control. Like make sure that that commitment is true and I know how much I'm paying on the fees or per transaction. I'm not talking about aggregates, I'm talking per transaction, how much I'm paying on the fees, why I'm paying what I'm paying, if there's a chargeback or a refund, and when I'm going to be paid that money on the settlement. Then when we go to the third layer, we call that financial control. So now that we have that commitment made and that we can check through those files, now we want to add that bank account statement in. We want to make sure the money is going to your bank account and you're receiving that money, whenever the partner, the acquirer, the network, whoever committed those funds to be transferred to you. So if they committed to transfer them in T+5 after a transaction was made, then we're going to check in T+5 if the bank actually received those. So again, that's all the cash control that we do, fee control, et cetera, et cetera. But that will be more on the financial side. Make sure the money arrived. Then once that's done, we go into the fourth layer, which is the accounting control. What the accounting control basically means is now that we have the files and now that we reconcile it with the bank, we need to make sure that there's consistency on the ERP. But not only consistency on at one point in time, but it continuous consistency. So what we need to make sure is that whatever happens, for example, in a chargeback scenario where I have a transaction, but later on I get a chargeback, maybe a couple months after that, I want to make sure that my ERP is reflecting that ideally in real time. Again, we can do it pretty much close to real time end of day. But whatever method you want to use, you want to make sure that consistency is there. So if something changes on those files, you can adjust your accounting entries accordingly. Ideally, you can automate the accounting entry process to adjust itself based on whatever you're getting on the files, right? That ideal scenario, of course, that's part of what we do. But again, whatever you choose to use, make sure that's covered as well. And on the fifth end, we would do either, the reporting side, which is closer to what compliance reporting would look like, or just make sure that the transactions that you're receiving and the accounting that's happening within the ERP, you had a very high confidence on the consistency of that data later on, right? Like once you adjusted it, that you're reporting after that, it's being consistent. So that's pretty much how the flow looks like. And I'm about to go a little bit more into the weeds. So if I'm going super technical, please, just send a Q&A or reach out and we can make it a little bit lighter. But this is a very generic way of how the payment system or the payment reconciliation flow would look like. And now we're going to go a little bit more in detail. Again, this is a fairly shallow view of how the process looks like. Inside of any of the squares, there's a lot of content. And what I want to showcase now is basically go through what a good or what we would consider a good financial area will be structured around that money in process. So how am I going to structure if I'm a CFO, for example, how I should structure my teams to make sure they can control that, right? Because that's a sizable amount of stuff to reconcile and control. So how can I make sure my teams are working together? And what are the handoff processes? And what are the KPIs that I need to set for each of those teams to make sure there's no money leakage in the process, right? Just to make sure that I know what my accounts receivables are, my payables are, and all of the almost ERP accounting talk in that payment flow. Um, how to make sure that's 100% accurate. So this is what we would answer to that question. So in Simetrik, basically, we split this process and we've seen, and again, this is not, we created this, but we've seen this in production. Like we've seen this on large payment companies that deal with this process every day. And we come to the conclusion that, this looks like a great way of structuring that process, that team, and those KPIs. So I'll be exploring how the structure looks like in this part, and then I would go into the KPIs on the other side. So in terms of the process itself, so we have all of the data layer on the left side, on the data source side. On the slide I'm showing, that's the data sources. And then from that side, we would connect it to basically three teams that have to work in a very coordinate manner. Ideally, you have a system or something in place that can cover those three teams. Again, we're talking about this. So yes, Simetrik can cover the whole thing. But even if it's not with us or not with Simetrik, whatever you use, make sure that those three teams are using the same data and there's consistency between them. There's been a lot of times where I see customers that basically each of the teams are using different data sources and there's not consistency between them. So maybe the operational team is fighting with the financial team because they have an X amount of chargebacks, but then the financial team has a higher amount of chargebacks, and they cannot reconcile why. Um, so ideally, you have a platform that can cover those three teams and can give them visibility over the same numbers and help them keep them coordinated. So those streams, of course, are the operational team, then the FinOps team, and then the accounting team. Those would be the three teams that we see basically interact on that money and control process. And I'm going to do a payment flow in a very summarized, simple way, hopefully, to showcase how those teams will interact between them and make sure that there's no money leakage in between. So the first data will go into the operational team. And basically, the operational team, what they would do is what we would call a cost control team or transaction control team. I'm sorry. The transaction control team would go into that first part of the flow, which is more like we want to make sure that there's data consistency when the networks are either sending us their data. We want to know that acknowledgement that they're going to be paying us whatever data we sent originally. So the data would arrive to that transactional cost control team. Sorry, generally we've seen internally that team split in two, right? And for the smaller PSPs that are on the webinar, um, again, because this is for a large PSP, generally those are two separate teams. But if you have a smaller PSP, just make sure those roles are in there, and they may not be different, people that are tackling this, but at least you have a clear distinction over what each of those processes look like, even if it's the same person that's, solving those for the smaller folks. For the larger folks, there's more stuff that we can talk about. Specifically, you're a publicly listed payment company. There's a little bit more nuanced in the operational side that I'm not going to go into in this call because there's not enough time for it. But if you're public listed payment company, would love if you guys can reach out, and we can give you a little bit more nuance on the operational team, how you structure that, because being public adds a little bit um, more requirements to the structure of the team. Not to go into super a lot of detail. So once those files come in, what you want to check first is, on one end, we call the authorized transaction recon. So basically, making sure the authorized transactions are acknowledged by your payment partner. Let's talk, either that could be a network, that could be an acquirer, whatever those may be. Let's say it's a network now, Visa, MasterCard, or like an acquirer in the US, like Pfizer, et cetera, et cetera. You want to make sure those authorization has been acknowledged by your partner. On the other side, you want to take all the parts of that's called all the chargebacks from that input, and then you want to send it to a team that will just handle chargebacks, or a different role that will do the chargeback control, and then dispute management. So that will be the first big block. And again, I'm going to go super fast here, but hopefully it's clear. So on one end, you want the authorized side. On the authorization, you really want to just look at the transactions themselves. You don't want to go into the costs right now and stuff. Just want to make sure that the what you authorized, it's going to be settled. Simple as that. And then on the chargeback side, you want to tackle the disputes as fast as you can. So you have one team that gets the chargebacks, reconciles them, and then starts generating the support to send it over for any dispute that may arise. Right. So that's the first block. The two handoffs that you would or that you want to see there. The first one is going to go to your accounting team. So the accounting team, generally from the operational team, will receive at this stage all the disputes and the chargebacks, because they would have to adjust, on the accounting side, what oh my god, the provisions. Sorry, almost lost that word, but they would need to adjust the provisions to reflect those chargebacks. So that'll be one of the first reports that you want to send. Again, we have those reports pretty much set up. If you guys need them, we can look at those. But once that happens, then the accounting team can get those and start doing provisions. And then the second report that the operational team will send will be the transactional recon, or the result of that transactional reconciliation, which will be tackling the authorization side, to the FinOps team. Now, the FinOps team would receive that report, and they would send it what a role inside that FinOps team, which basically will check that cost control. So once the transaction has been authorized, you want to make sure that the theoretical cost per transaction that you agree with that network is actually what you're paying. So that's what the cost control team would do. So they want to go receive that transactional, the transactional settlement or the settlement file. And then from that file, they want to make sure on a per transaction basis that you can compare how much did I pay for this transaction. And then ideally you go to the contract you signed with that network, say, all right, what was the agreed initially to pay? And then those things should match. That's the cost control recon, or the cost reconciliation that we have there. Once that's done, then you can send it to partner cost recovery. So you can reach out, and maybe Visa is charging you a different amount, or you're required to charging you a different amount. You can reach out and say, hey, this transaction specifically, you overcharged me by this amount. So provide that visibility so that it's easier for them to pay you back. And then on the second part, what you want to start building is, once you subtract the costs from that authorization data, what you're going to get is really the settlement amount that you're going to later on be, that you're going to be deposited by the partner or that acquirer. So that's when you want to do the, theoretical bank balance report, and make sure that the invoices that networks are going to be charging you are accurate. That balance report basically would tell you, all right, how much money am I supposed to get tomorrow? T plus two, T plus three, T plus four, and then you want to reconcile that with your bank account to make sure the bank, the money arrives. So that's when we're going to the bank reconciliation component. And then on that bank reconciliation component, if the money didn't arrive, then you have a collection part of it. So now I'm on the bottom side of the graph. So you have that collection side to reach out to whoever partner didn't pay and start collecting the money. Assuming the happy path and the partner paid, your bank reconciliation is successful, so you reconcile properly. And then that FinOps team can take that bank reconciliation and then reconcile that with the projection that they would have internally of how much they were expecting to receive. They received it on the bank, and then they can start building. A forecast of how the bank balance is going to look like, so they can have an accurate low view of their cash position in the future. Right, one of the big things that payment companies basically live for is making sure their cash positions are controlled into the future. Because what you don't want is an accrued expense that will come maybe 2 or 3 days into the future to hit your bank account when you don't expect it and maybe drive that balance down to, worst case scenario, to an overdraft, um, kind of overdraft position. You want to be with your bank, partner bank, in an overdraft situation. That may bring a lot of complications that, that may halt the business, you know, to stop, or you can agree different financing options with the bank, but generally you just don't want to be in that position. So that's where that forward-looking kind of cash position forecast would look like, and that would be fed by the data that you're coming that it's bringing that operational team, giving you visibility over this money will arrive in 3 weeks or 2 weeks. Now you reconcile that with your accrued expenses, and you know how much you have to pay in the next foreseeable week or month or whatever, and then that reconciliation will give you a clear cash position view. Um, that later on, all of that sum up, you can go back to the accounting side and give them that visibility so that they can start adjusting the ERP accordingly when after the money arrived, and making sure that all of the exceptions that have been filtered out through the process are not affecting the ERP side, right? Or affecting it properly, right? Like they're not adding into the wrong account. So after that handoff happens on the FinUp side to the accounting side, and now the accounting side has all the clear picture of what actually happened, what actually got into the bank, and what are the chargebacks that we're working with. And then internally, they would do that, and they would basically adjust their provisions and adjust the ERP accounts to reflect that reality. So we have a bunch of stuff there. We have the accounting payment commitment. We have the receivable provision. But generally, what you're going to start looking at is basically doing your adjustments and your provisions and your accounting reconciliations, that is going to leave just in the ERP, right? Like if you think about this, we've only discussed stuff that's away outside the ERP. And this is now when we're getting into the ERP and what traditionally is called accounting reconciliation, right? So hopefully that clears out when we discussed any distinction between what I call operational reconciliation and accounting reconciliation. Basically, operational reconciliation, we're referring to everything that we've been discussing except this part, which is making sure the ERP is consistent. And after that's consistent, basically, you just did a money in process, right? Like you've reconciled everything, and then you can do either reporting, you can do alarms, you can do dashboards, you can do et cetera, et cetera. You can build a lot of stuff on top of that. But ideally, you're doing this every day, end of day. So for our earlier adopters or like smaller PSPs or companies that are starting to work with us, they would generally have a process that they would close their books by the end of month. Um, and generally that would take whatever time, 10 days or so to close those books. Once they go through a implementation process of this whole picture, which is very very it's large, is robust, there's a lot of controls in each of those squares that I talked to. But for the more mature companies that have been working with us for a while already, they come to a point where they can actually do a pre-close by end of day. So they would have their books updated on a daily basis so that whenever the month end comes, that financial close process is not taking 10 days, but it's almost pre-done. There's very few adjustments that you got to do. So that's another positive, I would say, from having this whole process automated. Again, because if you're doing 100 million transactions a day, there's no way you can handle this either manually, or if you have an internal system. I mean, we can chat more about that and see what gaps there are. But generally, you need to cover the whole picture, right? Ideally, you have something that covers the whole picture and not just one part of the whole process. Um, so in order to finish this, and again, we have around 13 minutes left. One of the big questions that I got from one CFO of another large payment company was like, "All right, Juan, this looks great. I love this. I'm very happy that Simetrik can handle the whole thing. Very relieving, but what are the key KPIs that I should add or that I should like, require from my teams to make sure that I'm not missing anything?" And that's where I'm going to go into in the last two slides of this webinar. Long story short, we built a graph of around 10 KPIs per team. So 10 for the operations, 10 for the FinOps, and 10 for the accounting, where we would discuss each of them with a little bit more context, a little bit more depth of what their business did and stuff like that. And from all that, again, because the time here is limited, I just summed up the three largest KPIs, or like the three probably more important or more common KPIs that are relevant to the operational and the FinOps teams. So generally on the accounting side, most of the KPIs are associated with any inconsistencies between the ERP and the files. But when we're talking about operation and finance, we're talking more on the on the receivable side, on the money being lost, or maybe transactions or fees that are being overpaid, or transactions that we cannot find. So that really affects a little bit more of the business itself, more so than just plain consistency operationally. So basically, I summed up just on the operational side, on the finance side, or the FinUp side, so that I can give you a little bit of a glimpse of what that would look like in terms of KPIs. So on the operational team, I think there's some, and this comes with a caveat where like there's probably some KPIs that are already assumed if you're in payments, right? Like um, one thing that's very simple and that's assumed is, for example, your acceptance rate. That's hyper common. That's like everybody should be looking at their acceptance rates. Um, so I'm a little bit discarding those very obvious kind of KPIs, and going a little bit more to more the interesting KPIs, mixed with also commonality. But the first one would be the TPV per payment method. So I'm not referring here to the TPV per partner, right? So if you're using maybe two or three acquirers, or if you're using, or if you're doing, two or three different networks, right? Visa, Mastercard, Amex, Discover, or if you're in Brazil, for example, if you're doing PIX, I'm not referring to how much money is going through each of the payment methods. I'm referring to the payment to each payment partner. Sorry, I'm referring to the payment methods. How much money are you moving through credit card payments? How much money are you moving through ACH payments? How much money are you moving, et cetera, et cetera, et cetera? And the main reason here is because some of our customers have used this dashboards and this data to renegotiate fees with their partners, right? Like if your business naturally is not moving a lot of ACH, but it's moving a lot of credit cards, well, maybe you can make a deal where like maybe you pay a little bit more on the ACH side, but you get a little bit of a discount on the credit card side, right? So those kind of strategic decisions are powered by this TPV per payment method dashboard that gets updated daily, right? So that would be one of the big ones on the operational side. On the second one would be, because we're talking about a global PSP, so we're talking about multi-country, multinational PSP. Most of them would have two or three partners, payment partners per country, right? So one of the key metrics to follow up with that kind of operation would be something like a partner rejection rate, right? Given that we all leave and breathe because of acceptance rate, I want to know if I'm going into, let's say, London, and I'm going to be using two or three partners that are going to help me, you know, process transactions in the UK, London, the city, but in the UK, I want to know what is the rejection rate of each of them to understand how should I route my transactions. The last thing I want is one of my merchant transactions to be rejected because I route them through the partner that is not accepting transactions, right? Like that would be a bad scenario for me to be in. So the partner rejection rate helps me look at all my partners and say, all right, these are the better ones. These are the ones that are rejecting me the most. Um, Maybe you can create a sub-merchant account with them. I don't know, with a different code or classification, or you just go and start routing transactions to the better partners, right? So partner rejection rate is key, more so if you have a global PSP because of that. Okay. Um, and then finally, you have the chargeback ratio, right? Like chargeback ratios, it's fairly straightforward. Um, to know and understand where the fraud is coming from, right? Like where the fraud is coming from, what are the partners that are getting more fraud, what are the geographies that are getting more fraud, et cetera, et cetera. So that's another very interesting thing that you should look at. And again, that's a fairly common one, but I thought it was important enough to put it in here. On the FinUp side, then we have a couple that are worth mentioning. There's three are the ones we picked. One would be the open pending balance. So open pending balance basically is um, it's very similar to the receivable that you have with another partner, but it's tied to the transactional reality of the files that you're getting. So basically, these will tell you exactly how much money net after costs. So this is important. Um, if you see here in the description of open pending balance, you have your authorization transactions or the partner that transaction you got authorized, and then you got to subtract refunds, you got to subtract chargebacks, and then you got to check on fees also to know exactly net how much money that partner owes you at any point in time on the chain, right? Like today, tomorrow, et cetera, so that you can start assessing what is your risk. Um, in a scenario where one of our customers had this problem, where one of their partners that they were using in specific geography went out of business, and it was a very unfortunate scenario. But they had visibility over what was their risk, what was their exposure to that partner. So that's why the open pending balance is so important. And you can look at it from a partner perspective. You can look at it from a geo perspective, from a country perspective, or you could look at it from a company wide perspective to understand what's your risk with other partners in the chain, right? The second thing that's important that we added here was the settlement accuracy. So basically, the settlement accuracy reflects the difference between the transactions that my partner acknowledged and the actual money that got settled or transactions that got settled. So basically, it speaks to how inconsistent is the data that my partner is acknowledging is going to pay versus what actually received. And the reason why this is key is because that also is another variable to assess how good of a partner you have. Right? Like, because I may be accepting for the settlement all of the transactions you're sending me, but then if I accept $10 and whenever I pay you, I pay $5, then you probably are not going to be trusting me a fair amount of time, right? Like, and again, for PSPs that are operating maybe in a one single country where there's a large partner that's generally trusted, this may sound a little bit odd. Like, would that happen at any point? But for PSPs that probably operate in other countries or are larger, probably that, if you're in the operational team, you're like, yeah, it happens every day and it's very frequent and you got to check for those differences. And again, that may not be a huge difference, but it happens, right? And if it's a huge difference in very specific cases, then that triggers probably a very deep conversation with your partner where it's like, hey, you're accepting this transaction, but you're not paying that money. Um, and then finally, which is one of the probably the ones that most of our customers are very interested in and require and ask for that from us, is that theoretical versus actual cost on a transactional basis, right? So it's basically going back to my explanation, is going to that contract that I signed with the network of the acquirer, look at what the cost of that transaction should be, calculate automatically and a theoretical cost that I should pay for that transaction, then look at the settlement and how much they charged, and then from there look at if there's any difference. Maybe I'm overpaying, right? The amount of scary stories of PSPs coming to us saying, "Hey, we did an audit of the partners and we just realized we've been overpaying them um, X thousands or millions of dollars for the last X years or X months." um, it's pretty common, right? Like, so if you're looking at your costs on an aggregate basis and you're not doing transactional reconciliation and assessing the theoretical cost versus your actual cost, then that would probably be a big um, thing to start looking at. And again, we can automate all of this stuff, but even if you're not doing it with Simetrik, I think at least that's a good food for thought where you're thinking, huh, how can I assess this, right? So that's generally the KPIs. Hopefully that was interesting. And again, before we finish this call, um, I want to just again mention back what we do at Simetric, where like most of the payment companies that we work with have seen returns between 2 and 15 basis points of the overall TPV after they sign up with us and after they implement. So, if you're a payment company, if you're an acquirer, if you're a bank that's sponsoring ISOs, if you're a bank that has an acquiring business, if you are a marketplace that is dealing with payments internally or that's doing using an orchestrator, um, or if you're not an orchestrator for that matter, or if you're a large e-commerce and you may be using 2 or 3 PSPs, or even you're just using one and just want to audit if that one PSP you're using it's really worth it and it's doing a good job, just reach out to us and we can definitely help you assess those things. And yeah, hopefully this was informative and hopefully we all learned a little bit more about the payment space and how to do that. Um, so it was a pleasure talking to all of you. I think I have one question on the Q&A real quick before we go. It's like I understand how Symmetric supports reconciliation, but I'm curious what its use as a ledger organization. Lucas, can you define ledger organization? How does the platform manage and store transaction events and balances in a way that can serve as the system of record for financial operations, double entry and audit trails? That's a good question. So the answer in short, I don't know exactly what you're referring to, ledger organization. I'm going to assume it's more like a sub ledger of the accounting, where we can help basically storing events. Again, depends on the type of events. We have one customer, for example, where they store their website events in a data queue and they connect that to Symmetric. And balances, I'm assuming you're talking about bank balances. So making sure the balances are reflecting in real time what the events that you're throwing at it, and make sure you're keeping track of those balances. Um, so to have that system of record internally where you have a complete audit trail of those events and how that balance on the bank or whatever balance you're looking at is actually matching with that, and you can go in and audit. That's part of what we help for sure. We've seen a good amount of, for example, banks, that kind of use case. That's a little bit on other webinar we can do, but yeah, we can help with that. So we can definitely help you to keep track of that kind of system of record internally and make sure it's consistent. I've seen it a lot at banks. So if we can talk a little bit more about that, and we'll be reaching out. But yeah, that's one of the things that we do. Anyway, thank you, Lucas, for reaching out. We're 1 minute over, but I just wanted to say thank you to everyone. Hopefully, this webinar was not too into the weeds and was very informative, and everybody learned a little bit of payments and how to reconcile those today. And yeah, any other questions, please reach out to the team. You can reach out at symmetric.com. If you want to reach out to me directly, my email is just the letter J at symmetric.com. And we can definitely have a little bit more of a chat on what your company does and if there's any way we can help reconciling and automating reconciliation. So for everybody, thank you for coming and hope you guys have a good rest of your week. And yeah, any questions, reach out. Thank you. Bye bye.